January 16th, 2023, Martin Luther King's birthday, where the market is closed today. So I'm going to hit you off with three videos as usual. As you all know, the reason why it's important to watch my videos, and I don't care if you do or you don't, perspective. So I see things in the eyes of retail as a trader. I see things in the eyes of an analyst. I can see things in the eyes of insiders. I can even see things in the eyes of a journalist, someone that doesn't have skin in the game, that's not on the ground floor. And that's very, very important to have perspective and to see all the different ways and who's who during trading, because that gives us an idea of what to do during what point in time. So even not just recently, like for the past several months, because of all 2022, there was way too many bear market rallies. So now I'm covering that in this video. So the stock market, as you know, you might not have known, but if you read my posts, seen my other videos, it's a live auction. So when the market is in a bear market, I call it a game of chicken. It's a game of chicken. I'm going to go through that in detail because we're trending down. We're in a bear market. We're trending down. We're in a bear market. So I'm going to get into that. When we're in a bull market, I call it a bull run because it's almost like a bull stampeding and everything just goes up because it's a bull stampeding. So I'm not going to go into that too much in details, but I want to go into the game of chicken in very, very big details because a lot of people don't understand. So it could be that we have a lot of new retail now. We have commission-free trading. Everyone has a cell phone. It's easy to access the internet. Free to trade. So obviously there's going to be a lot more traders now than in 2019. But you also have to keep in mind, that's why we're going to have extremes, but you're going to have to keep in mind that still, even that, there's more traders than usual. Like on a really, really hot day, when we're rallying big time, retail could be 30-40% of the market. But even still, we are not the majority. So smart money might not mean as much. Institutions might not mean as much, but we still have to go where big money goes. And on days when the market is down, retail might be like 20%. And on a big day, it might be 40%. Those are things we have to keep in mind because I'm constantly asked, like all last week, I was asked, what if I'm wrong? I am not wrong. I'm telling you I'm not wrong. Things are going to go down. And like I just said a couple of minutes ago, the stock market is either a bull run, like a bull running, or a game of chicken. As we already know, and I just said again, the stock market is an auction. It's an auction. When it's an auction, regardless if all retail owned Bed Bath & Beyond, just like the other day, it went up to 6. So this is what happened with Bed Bath & Beyond. Bed Bath & Beyond a few weeks ago actually announced that they're not sure if they're going to keep going. The stock dives to $1.25. And this is not fun. It dives like maybe 127. But let's just say 125, right? Because we're rounding. It dives to 125. Retail takes this as good news. It is heavy short, like 55, almost 60%. So retail goes together on Reddit, on Twitter, on StockTwits, probably on YouTube, TikTok, who knows. But I know on Reddit, I'm seeing it. I know on Twitter, and I use StockTwits a little, so I know it. So retail formed like an army. And at that point, when they formed like an army, there was no question in my mind, retail owned 80 or 90% of Bed Bath & Beyond. So it was rocketing. It went from $1.25, no FUD, to it's $5.88 or $5.90, but let's just call it 6. From $1.25 to 6. So it went up almost 500%, right? It went up almost 500%. Then on the day it dropped from almost 6 to now it's like 370. So it dropped down to 40%. The day right after, Bed Bath & Beyond confirmed that they just had an interview with bankruptcy lawyers. So what does that mean? It's a game of chicken. So whether everyone owns the float, whether it's one institution owning the float, whether it's a CEO owning the float, it's a game of chicken. Whoever gets out first gets the highest price. Whoever gets out first gets the highest price. And the problem is when you get headlines, bad news headlines, it's going to strike fear. And when it strikes fear, this is a game of chicken. The first person that gets out the highest. So just like I said, right now we're downtrending. It's a bear market. It's a game of chicken. We're going to have a ton of bad earnings. I'm going to go through that in video 2. And that's why I am 100% sure. I'm not saying I'm 99. I'm saying I'm 100% sure we're going to go lower. How low? I'm not positive. But earnings are going to be bad. And when earnings are bad and they hit the headlines, it's a game of chicken. Whoever gets out first is going to get the most. Now, it's impossible. I'm willing to bet anybody that the S&P rockets to $5,000 on bad news. Why? Because smart money is still around 60%. When smart money, they're still the majority, 60, 70, 80% daily, reads all the horrible headlines. This is a game of chicken. Whoever gets out first gets the most. Now, let's just say retail doesn't want to do nothing, right? Let's just say retail doesn't want to do nothing. Our retail still wants to bid up a stock on bad news. Let's say institutions, smart money, fell asleep. Anything is possible. Let's just say that happens, right? Then you got insider seeing that the stock is going up when the company is doing badly. What do? They sell. They take advantage. Then the stock goes down. And the worst thing that can happen is a company that's doing bad prints brand new shares, increasing supply that wasn't even there. If a company had 100 million shares, now we're going to go back to Bed Bath & Beyond. I believe Bed Bath & Beyond has 120 million shares right now. The CEO is not very smart. Sue Grove is not too smart. Why? Because she already has authorization. Now, you could look it up with the SEC. If your company is in financial difficulty to function, you need to pre-announce earnings, say things are bad, warn investors. If you do that, I think it's two to 4 weeks, the SEC will allow you to sell shares. So as long as you come out and say those things, which Bed Bath & Beyond did, they get authorization to dump shares. The other day, when Bed Bath & Beyond went from, I think, 350 to 590, there was 330 million of volume. That was a clean day that they should have printed brand new shares, killing supply. So, once again, if the whole market doesn't care about bad news and still bids up a stock, smart money will come in. If smart money doesn't come in, the company insiders will print shares. I mean, not print, sorry. They will sell shares. If they don't sell shares, the worst thing is the company printing shares. And why that matters is because bad news, someone is selling. Who is going to sell first? So the stock market is a game of chicken. Right now on Netflix, I'm watching the Spotify series. It's called The Playlist. Watch that whole series. If you watch it, I think it's episode 4 or 5, the CEO, who's still the CEO and founder, clearly says, when the company was doing bad, he clearly says he must sell the company. This is an inventor selling the company. So I've been trying to warn people forever. You cannot listen to CEOs. You cannot listen to insiders because their goal is an exit plan. They're in the stock market so they can get money. The reason why you're public is so that you can get money from people. And the sad thing is, Spotify, I think the idea was made in 2004, 2005. It was incorporated in 2006. It goes over in the video. 2023, they're still losing money. So what does that mean? The company is garbage. Company is garbage. The idea is cool. The idea is cool. And it's being funded by you. It's being funded by you. Because you guys decide that Spotify is worth something. I don't think it's worth anything. The only reason it doesn't drop to $2, $5, I think it's $80 or $90. The only reason it doesn't drop to $2 or $5 is because there's hope. There's dreams. Because you got that CEO, Daniel Ek, and you have CEOs like Elon Musk pointing, trying to paint dreams. And when they paint dreams, this is why speculation and growth stocks always will do the best. Because when they paint dreams, when someone tells you that Spotify is going to take over the world, that they're going to make tons of money, even though 17 years later they're losing money, they get someone to believe it. And when you get some people to believe it, then that stock itself has a bull run. It has a whole bunch of cultists, a whole bunch of people that aren't with reality, but on the bull stampede, what's going to happen is even though you're realistic and you know what's going on, you're going to be stomped on by the bull stampede. So Spotify is worth something. The idea is great, but it's definitely not worth 80 or 90. And it dropped from like a 300. And I was trying to buy puts many months ago. But once it dipped under 120, there was no reason for me to do that. So once again, stock market is a game of chicken. When you have constant bad news over and over again, don't you worry. We are going to head lower. Now, I feel fair value is 3,400 S&P, NASDAQ 9750, but I'm going to go over that in video 2. But I want you to know that the stock market is either a game of chicken or a bull market run.